All right, today we're jumping into a really fascinating and, let's be honest, pretty bold investment idea. The whole argument is that the biggest winner of this massive AI boom might not be who you think it is. We're going to explore a company that could hold the key to solving AI's single biggest problem. So let's get into it.
First things first, let's kind of set the stage with this classic idea from Peter Lynch. The whole argument we're about to unpack is built on this philosophy. The point isn't to look for what's cheap right now, but to look for what's great, what has the real potential to completely change an industry, regardless of the current stock price.
So, keeping that idea in mind, let's ask the big question. We all know the usual suspects in AI, right? But what if the most crucial piece of this whole puzzle, the one with the most insane potential, is actually hiding in plain sight, and the market is just looking at it all wrong?
So, the company at the heart of all this? It's called Bloom Energy. And yeah, right off the bat, we have to talk about this sticker shock. The stock has had a huge run-up. But if we're sticking to that Lynch principle, the argument is we shouldn't get scared off by the price. Instead, we have to ask, does the market really get what this company is? And this is really the core of the whole thesis. The analysis we're looking at says Wall Street is making a classic mistake. They see Bloom Energy and think, oh, it's just another alternative energy company. But the argument is that this is like calling early Tesla just a car company. The reality, according to this analysis, is that Bloom is actually an essential infrastructure company for the entire AI revolution.
So what is this massive problem that Bloom supposedly solves? Well, it all boils down to AI's dirty little secret. It's absolutely insatiable and, frankly, crisis-level need for electricity.
Just to get a sense of how big this problem is, check this out. One report says that by 2030, data centers are on track to eat up a staggering 16% of all power in the United States. Now, to put that into perspective, before 2022, that number was just 2.5%. That's not just a small bump, that is an astronomical surge in demand.
And look, the problem gets worse. It's not just about making more power. It's about getting it where it needs to go. And the U.S. power grid is, well, it's old. The average transformer out there is 38 years old. The whole system is fragile, inefficient, and just completely unready to handle this new kind of load.
So here's where it all comes to a head. You've got this massive timing mismatch. Experts think it could take a decade, maybe more, to upgrade the grid to meet AI's needs. But the AI boom isn't waiting 10 years. It needs that power right now. This is the bottleneck, and it is a huge one.
So, if the grid is broken and slow, how on earth do you solve this crisis? Well, according to the thesis we're digging into, Bloom Energy has a pretty unique answer. You just go around it completely.
Meet the Bloom box. Seriously, it's described like something out of a sci-fi movie. You can literally drop one of these boxes in a data center's parking lot, hook it up to a natural gas line, and it will churn out constant, reliable power 24/7 with zero connection to the main grid. It's basically a power plant in a box.
But the real magic, the real genius, is how it delivers that power. See, the grid speaks in AC, or alternating current, but all our computers and AI chips, they speak in DC, direct current. The analogy in the source material is perfect. Imagine the grid is speaking English, but your computer only understands Japanese. You need a translator, that hot, clunky power brick on your laptop cord. For a data center, that translator is a whole building that wastes a ton of energy as heat. Bloom's box, it just skips all that. It provides DC power directly.
And this is where it gets really good. This is the aha moment. NVIDIA's brand new top-of-the-line Blackwell AI chips, they're designed to run on exactly 800 volts of DC power. And in what is either an incredible stroke of genius or just a wild coincidence, Bloom's boxes naturally pump out, you guessed it, exactly 800 volts of DC power. It's a perfect native match. No translator needed. It's like they were made for each other, and it eliminates massive amounts of energy waste and cost. So the tech sounds pretty incredible, right? But is anyone actually using it? The analysis stresses that you have to watch what the big players do, not what they say. And it turns out one of the biggest names in technology has just placed a massive bet. That player is none other than Larry Ellison of Oracle. He just signed a huge deal for Bloom to power Oracle's cloud infrastructure. But here's the really telling part. As part of that deal, Oracle got warrants, which are basically options to buy shares down the road at a price that implies Bloom is worth $27 billion. That's a massive, massive vote of confidence from one of the smartest guys in the room. So,
If this is so great, why hasn't everyone else piled in? Well, the thinking here is that the other tech giants are kind of playing it safe. They're letting Oracle be the guinea pig. But if this partnership works out, and it gives Oracle a big advantage, they'll have no choice but to follow along to stay competitive. And if that happens, the wait-and-see game is over, and the floodgates for demand could swing wide open.
Okay, so let's get down to brass tacks. The numbers. The risks. This analysis lays out some napkin math to show what the potential upside could look like, but it's also very, very clear about the big hurdles that are standing in the way.
All right, let's walk through the super optimistic bull case scenario here. The argument goes something like this. If Bloom can capture just 20% of this new AI power market, that would translate to about $30 billion in yearly revenue. You apply some normal profit margins, that could lead to $10 billion in net income. And if you put a standard valuation multiple on that, you could get to a potential share price of over $1,000. That's more than a 7-fold increase from where it's been trading.
But, and this is a huge but, we have to be brutally honest about the bear case. There are major red flags here. The management team has a track record of overpromising and underdelivering. The stock is famously a roller coaster ride. And if you look at its financial health, you see a high PE ratio, a lot of debt, and a large number of investors who are actively betting against the stock. The bottom line, execution is everything, and there is very little room for error.
So when you put it all together, what you're looking at is what investors call a classic asymmetric bet. The potential downside of management messes up is very real. You could lose, say, 50% of your investment. But the potential upside, if this whole thesis actually plays out, is dramatically larger, a gain of over 600%. The reward, if it actually happens, could absolutely dwarf the risk. And that really brings us to the final, critical question. What we've just unpacked is this incredibly high-stakes story. It all comes down to whether you believe the thesis, and more importantly, whether you believe this management team can actually pull it off. Is this the hidden key to unlocking AI's future, or is it a gamble that's just too hot to handle? That, right there, is the billion-dollar question.